In recent developments, the BRICS, Brazil, Russia, India, China, and South Africa alliance has signaled its willingness to expand its membership to include African countries in the near future. The BRICS group, known for its collective influence on global economic and political affairs, has expressed its openness to incorporating African nations into its fold. This move holds significant potential for enhancing cooperation, trade, and investment between the BRICS nations and the African continent. With discussions underway, the prospect of Africa joining the BRICS alliance is generating both anticipation and curiosity regarding the potential impact on regional and global dynamics. Before 2011, the BRIC grouping consisted of Brazil, Russia, China, and India, with no African countries included. The leaders of these nations convened to protect their shared interests. However, with the inclusion of South Africa, the acronym expanded to BRICS. Since then, there has been a growing interest from various countries, both officially and unofficially, to join the BRICS alliance. This has led to discussions about potentially incorporating additional letters into the acronym to reflect the expanding membership. The BRICS nations held their fifth meeting in Durban, South Africa, on March 26 to 27, 2013. This event served as a platform for Africa to enhance its connections with these influential emerging economies. The summit focused on the theme of BRICS and Africa partnerships for integration and industrialization, with the objective of fostering cooperation and leveraging the collective strengths of the BRICS nations and Africa. Africa's promising economic prospects, vast reserves of natural resources, growing consumer power, and favorable demographic trends have positioned it as an appealing partner for collaboration. The rise of the BRICS countries as influential global players have generated optimism for a mutually advantageous partnership that can contribute to Africa's progress. In recent years, the BRICS nations have strengthened their involvement with Africa, resulting in a notable increase in their contributions to foreign direct investment inflows and trade interactions. One noteworthy instance is the remarkable expansion of trade between China and Africa, which soared from $10 billion in 2000 to $190 billion in 2012. The partnership between India and Africa has been instrumental in nurturing the development of small and medium-sized enterprises throughout the continent. Brazil and Russia have actively engaged in Africa's mining and energy industries, frequently through collaborative efforts involving the public and private sectors. The BRICS countries' engagement in Africa can be attributed to several factors, including their interest in accessing the continent's abundant natural resources. Additionally, Africa's vast and underutilized agricultural sector presents an attractive opportunity for the BRICS nations. They also view Africa as a potential market for investments and the transfer of technology and knowledge, particularly targeting the expanding middle class, which is estimated to comprise over 300 million individuals. According to experts, the main driving force behind the BRICS countries' involvement in Africa is the continent's plentiful natural resources. Specifically, Brazil and China have played significant roles in the exploration and extraction of gas, oil, and minerals in African countries, including Angola, the Democratic Republic of the Congo, Nigeria, and Sudan. As a result of this engagement, substantial investments have been made in infrastructure projects throughout the continent. However, it is worth noting that while natural resources are a significant factor, they are not the sole focus of BRICS investments in Africa. Between 2003 and 2012, the manufacturing and services sectors constituted the majority, comprising 75% of the total value of BRICS foreign direct investment projects in Africa, as reported by the United Nations Conference on Trade and Development. In contrast, a smaller portion, accounting for 10% in terms of project numbers and 26% in terms of project value, was attributed to investments in the natural resources and agricultural sectors. The African agricultural sector holds significant importance for the continent's economies and has the potential to drive economic growth. The engagement of BRICS countries to Africa's agricultural sector is driven by their desire to share their own experiences in agricultural development and unlock the continent's agricultural potential. Brazil, being a prominent global player in agricultural commodity trading, can serve as a model for African nations in terms of agricultural development. By providing assistance and knowledge transfer, Brazil can help enhance agricultural productivity and mitigate the impact of food insecurity in Africa. The success of Brazil's agricultural model can be attributed to factors such as vertical integration, strong state support, and advanced mechanization. Promoting agriculture in Africa is considered a crucial development tool for long-term poverty eradication and hunger alleviation. Sharing the experiences and expertise of the BRICS countries would contribute to boosting agricultural productivity in Africa. Aside from the potential offered by Africa's primary sector, the BRICS countries are drawn to the benefits of diversifying African economies and gaining access to a large untapped market of approximately 1 billion African consumers. Traditionally, the BRICS have accumulated substantial reserves that have primarily been invested in developed countries. However, the enduring global financial crisis, which has disproportionately impacted developed nations, has prompted the BRICS to seek new emerging destinations that offer higher returns and reduced risks. Therefore, Africa presents an opportunity for the BRICS to diversify their investments into new frontier markets. Furthermore, investing in Africa provides access to a consumer market of 1 billion people, including a growing middle class. Sectors such as telecommunications, financial services, and retail have experienced significant growth in many African countries due to the increasing demand from Africa's expanding middle class. As discussions continue and the prospect of Africa joining the BRICS alliance looms, the global community observes with anticipation the potential impact on regional and global dynamics. The BRICS and Africa stand to benefit mutually from this collaboration, fostering economic growth, development, and shared prosperity.